Alrighty, what's going on, family? This is Shaheen. In this video I wanted to do a review of the trades that I took today and what I'm holding overnight, as well as introduce you guys to the concept of your own playbook. Okay, so let's actually start with the trades that I took. Tesla pre-market had a beautiful setup to the upside. Let's actually open up two charts. I took one loss today and one green trade today. So Tesla was my first trade of the day, and it was the first loss of the day. Let's zoom out on ES. So this was today. This was the price action today. Let's actually go to the 1 minute chart just to look at the open. So here we go. We got Mother Market. As we all know, if you traded today, we were very range bound. It was a fairly difficult day to trade. The theme of the day was both sides, basically all the time, looked great. You know, when you're down here, when you're near the 21, you're getting these cracks under the 21 moving average on the daily chart, and it looks great to the downside. It looks like we're starting to crack through. You know, we pushed above, we're starting to crack. This could be it. We pushed back above, we're starting to crack. This could be it. You know, we're holding under all these key levels. But then the same thing looks great to the upside. You know, we're holding the 21 great, and we even make a push higher before eventually, you know, getting back to this May POC, which, as you guys know, I love using POCs as an inflection point where we could inflect back down. I love using POCs as target, and this kind of indicated the range we were going to remain in the day. We had this liquidity zone with May POC and the 21 EMA. So we got up there and we rejected and started looking great to the downside again. Could we start breaking down these lows? Looks like it right here, but you're getting a lot of people chopped up here around this 21 moving average. Tesla was one of the trades I took this morning, so I actually grabbed calls early on. If we look at the 30-minute chart, this is a very clean setup to the upside, and even though it was a red trade, this is a trade that I would take 10 out of 10 times, because trades like this, where they set up perfectly, you get a push pre-market above one of my levels, and then tons and tons of closes above on that specific time frame. Here we have a 30-minute theory level. On the 30-minute chart, we're getting tons of closes above. Not only that, but we're also pushing back down into the level, so we're going to have a great entry at the open, so that if we do break, we're also breaking a flag pattern that Tesla is making pre-market. So this was the trade that I took right at open. I grabbed calls. They worked great for, 2 minutes. I was up a lot. And then, of course, my plan, if you followed me for a while, my plan on trades like this is risk the 30-minute close under. But this is one of those scenarios where you could let it ride all the way down, where you get that 30-minute close under, or you can use your judgment and what the market is doing and what other names are doing to potentially get you out earlier. So that's what I did today. I was in Tesla calls, looked amazing, was breaking the flag, was honestly about to lock up and take my profits and run, but it looked great. One thing that I should have taken account more of is what the market was doing. And early on, we just completely cratered at open. And so eventually, when the market's ripping and one name is not doing much, or maybe it's going down, generally one is going to start following the other. So in this case, for example, ES was falling, Tesla made a nice push, and generally what's going to happen is one of these names is going to catch up to the other. Now, if you guys were active trading this morning, then you guys know how aggressive this early selling was. It wasn't only ES, but it was basically every single name I was looking at. Of course, ES is the market. But yeah, everything started dumping fairly early. And so my eyes were on Tesla. Probably could have locked up here for a nice green trade. but I did want a little bit more profit from those calls, so I was in these calls seeing if the market and all the names I were watching could potentially bottom here at the 1 minute cloud, or could eventually find some sort of bottom at, where was my, let me get my day trading indicators, at VWAP, or if they could reclaim my momentum indicator to the downside. But a couple minutes in, everything started pushing down. 5 minutes in or so, I ended up cutting down here as we let go of my level, not even waiting for the 30-minute close. So I did, this was a position I put in that full 20%, that full $3,000 of my account in, and I did take a loss on it. Did end up saving some money though, using my better judgment, seeing what the market was doing, seeing how this is not ideal for a bullish setup, and taking my capital out and waiting for a better opportunity for a name like Tesla with the market to prove itself to the upside, which we didn't really get, on Tesla or anything. We dumped the rest of the day. It looks like we're pushing back above, but this was actually after we got a 30-minute close right here. So this is nothing real. Quickly rejected back down. Tried it again later. Once again, no close above on the 30-minute chart. The close came right here. So as you can see, we're not getting these closes above. Market's not going any higher. This is a trade that, I don't want to have my capital in. So I did take a quick loss on this trade. And then later in the day, let me pull up the actual time on my other screen. I did grab a lotto on some SPX calls. So give me one moment. All right, at 9:28-ish, I grabbed, so right here on ES, I grabbed some SPX calls. So right in this little zone right here. And what's important to note is what I was seeing there. And I was seeing, we were making these higher lows right on the 21 MA. And it was holding the 21 MA very well. If you were watching this price action, you could tell the bears weren't overpowering the bulls here. In fact, it was the opposite. The bulls were able to quickly reject these moves to the downside, make a couple quick pushes, get rejected at VWAP, make a little push here, get rejected a bit, but we're not rejecting down under the 21 moving average, which could have made a nice move under low of day. And so around, where was it again? Right here, as we reclaimed the 21 EMA again very well, I actually grabbed an SPX call. I grabbed, is this for today? It is. I believe I grabbed the 3930s. So let me copy these and show you guys what I got. So zooming in, 928. So yep, I grabbed them around 5.5-ish, and quickly we started getting that push all the way back to May's point of control. And so this was a trade, so let me extend this. This was a green trade that recovered a lot of the losses that I took on my Tesla trade. So bought it at 928, ended up locking right when we got there to May point of control, and it turned out to be basically the high that we wouldn't get to for the rest of the day. So it was a perfect lock right when we touched May point of control on this push right here, I believe. Yep, 1025. And yep, I got out around 9.6-ish, I believe. So right down here, as we rejected again, I was seeing if we can actually get a push above. Quickly rejected, got out around here for a nice almost 100% gain. So once again, on these SPX trades that I don't have a exact theory level or defined risk that I'm willing to cut my position at, I'm going to be sizing down. So with that Tesla trade, I did have a defined risk. I had that 30-minute level under, so I did size up a bit on that trade. And once again, that is a trade that I'm taking 10 out of 10 times. When that Tesla trade, when I get a setup like this Tesla trade, around 7 out of 70% of the time, this is going to rip in my direction to the upside. So that's why I'm presenting this idea to you about you having a playbook, setups that you're going to take 10 out of 10 times they show up. And this is a perfect example of that. And not only that, but it's a perfect example of how you can manage a position like this that you're going to take every single time that actually ends up going against you. So using the market and seeing how everything was moving down, no buying was coming in. We were holding under my momentum indicator, not giving any room to the upside. That is a perfect place to cut as Tesla loses that level we were trying to hold. Yeah, once again, I locked almost 100% on that SPX trade, which reclaimed a lot of the gains from that Tesla trade. But once again, I did size down on that SPX trade because it was a more of a accept zero trade. A great risk could have been low a day, but my game plan for not having a theory level is mostly just stick to accepting the full risk and sizing down. And so that's what I did, put around $1,000 of risk into that trade, gained around 1,000 back, and ended up around breaking even, still slightly red. This Tesla trade did go red fairly fast, and I did take around a $1,300 loss on this trade. Now, that being said, looking at the rest of the day, we did push back down. We rejected that MAPOC, got back down to the 21, and at the end of the day, it was a battle of where were we going to close, above or below this 21 moving average. And this was going to indicate to me what I'm going to hold overnight. And I actually decided to grab some SPX calls for tomorrow's expiration, the 3940s that I'm going to be holding overnight. I grabbed them around I believe around 8-ish, right near end of day, when we got that last minute push back above this 21 moving average. And now my risk is, since I'm holding overnight, tomorrow I'm trying to catch, first of all, I'm trying to catch a gap up since we actually held the 21 moving average. Right now we are pushing down, recovering nicely right around the 21 moving average. But if we open above this moving average again, I'm going to look to grab end of week SPY calls as well. And my plan is to risk a daily close under this 21 moving average. One of the reasons I'm doing that is because if you zoom out on the daily chart, let's zoom into where we are. Let's clean up the chart. One thing I noticed, ignore all of this, but one thing I noticed about where we are and where we were a couple weeks ago, oopsies, in this same zone right here, is I noticed we have a daily level that nearly perfectly aligns with the daily 21 EMA on ES. So zooming out, zooming back in, we have this 3902. This is a daily level, and what I also noticed is we already got one close above. This being today, we got the second close above. And so now my plan is, if we can sustain this higher, I would love to grab some SPY calls and risk a close back under and possibly try to get to that 4,000 psychological level on ES above. So that's my game plan, holding SPX calls for tomorrow's expiration, trying to catch a gap above since we did hold that 21 right at close. Generally, when market makers push price above a theory level or a level in general right before that candlestick closes, so in this case it would be the daily chart, right before the daily chart closes, we got the push above. Generally, when that happens, it's because that is a true hold of that level and they're planning on taking it higher. So that's the game plan. Obviously going to cut if we're gapping down or if we get a close back under this 21 EMA. I did post all these trades for my group, and for tomorrow I'll be going live with my group in the morning for around an hour and a half, so be there. DM me if you want to learn how to join the group. This was just a quick prep. Once again, another slightly red day. Not a big setback though. We got a fairly large account, playing with some good size. We had one green trade, one red trade. Looking for the market to get a little bit less choppy moving forward. Hopefully, we can hold this 21 EMA in either direction, honestly. Hopefully we can hold under it or we can hold above, and we can get a nice push going with a lot of momentum in either direction. Volatility like this in the form of chop does make it very difficult to trade, as we all know. So